The Singapore Exchange and US-based NASDAQ are establishing a landmark dual listing bridge. This allows companies to access both markets through a single initial public offering. The move is expected to go live from the middle of next year. It will also streamline the regulatory requirements for high-growth companies in Asia looking to go public. It's among the measures to make Singapore's equities market more competitive. Alexandra Anand with the details.
One initial public offering, two stock markets simultaneously. It's a first-of-its-kind partnership between the Singapore Exchange and the US-based NASDAQ. The collaboration is designed to give high-growth Asian firms more options to go public and reach investors across both regions.
This will be one of the few pathways that companies can choose when they want to go the IPO. They can either continue to evaluate and list in Singapore, to list in the US via NASDAQ, or where they feel that they are growing, in particular outside of their home market with a greater Asian focus, in particular, but Asia is still a fast-growing region. And this partnership reduces friction, reduces complexity, and creates a greater certainty to market.
The bridge hopes to attract firms with a market capitalization of at least $2 billion. It's also expected to draw investors from key growth sectors.
So with the draw of both US and Singapore liquidity pools, the new board will support efforts to attract more Asian issuers into the Singapore ecosystem, including from sectors that are less represented here in our market today. This expanded sector coverage, such as the tech sector, will draw new investor segments to Singapore, which would support efforts to rejuvenate our equity trading, research, and related professional services ecosystem.
The move is among the measures by a review group. It was tasked with making Singapore's equities market more competitive. Last year, the SGX saw just 4 IPOs. Since then, momentum has picked up, with 9 deals this year alone. The Monetary Authority of Singapore has also appointed its second batch of asset managers to further fuel that recovery. They include Amova Asset Management and BlackRock. They will be allocated a further $2.85 billion to attract more investors. MES will also be allocating $30 million to fund 2 new grants. It will support listed companies strengthen their investor relations, corporate strategy, and financial management.
Providing a grant to companies to train officers to communicate better on their growth stories, on their valuation of the company and what they're doing to unpack valuation. That would, I think, encourage them to look at the company better and even consider investing more. And it will also attract new investors.
An implementation committee will be established to ensure all the proposed measures are put in place.
And for more analysis, we are joined by Professor Lawrence Loh, Director of the Centre for Governance and Sustainability at NUS Business School. Lawrence, always good to have you on the show. So, the dual listing is not new, right? SGX has been championing for a while. But this particular one, the dual listing with NASDAQ, how significant is it and what benefits will it bring?
Yes, happy to be back, January. I think this is actually a bridge between SGX and NASDAQ. In fact, it's more than a bridge. In some way, it's like a double admission ticket. You can actually just with one single prospectus get admitted into 2 exchanges. But by having said that, of course, you still have to fulfill the requirement of both exchanges. So in other words, you have companies in Singapore or many parts of the world. If they want to go to NASDAQ, why not just be listed to SGX at the same time where the SGX badge? So we have this group of Singaporean companies who want to go there. At the same time, this dual arrangement might even attract new listings that may not actually even consider listing in SGX or even in NASDAQ. But with this powerful combination, this is the enlarged set of IPOs that might want to capture the best of the world, the best of Asia.
Now, speaking of, something that you say might not have considered us, but will do so now, are we talking about areas like tech? And how far does this dual listing make it more attractive for,
listing? I think for many technology stocks, the natural route is actually to go to NASDAQ.
Yes.
This is the signature market where they establish their benchmarks.
Yes.
But I think if they want to go to NASDAQ, at the same time, if they want to put one foot in Asia, I mean, because Asia is where the markets are, and more importantly, this is where the innovation is taking place. Mm-hmm. So with SGX as that attractive add-on, a plug-in to support the NASDAQ listing, I think this is a very compelling formula for tech stock to consider.
Mm-hmm. Now, in this time of geopolitical turmoil and, of course, zombie unicorns in tech, what are the risks we should be looking out for, preparing for?
I think the risks are always there in whatever equity markets you go to, the geopolitics, zombie companies. But I think we need to go back to the fundamental. I think in all investment, in any listing, the key factor, the key risk is actually macroeconomics, the economic growth, the inflationary environment. This will be the key determinant. So I think with this double listing, dual listing in both markets, I think companies, the issuers will be able to weather the risk even better, especially in macroeconomics.
Okay. Let's talk about the Value Unlock program. Now, what governance levers, are essential to create actual long-term value?
I think if you look at this value unlock, of course, it's so easy to say that we unlock the value.
Yes.
But someone has to do the unlocking.
Yep.
And I think it's actually the governance, the board of directors, or even the senior management in the company that does that. So the first thing we need to do is basically capability development. Mm-hmm. I think board of directors especially will need to know how to actually, make their stock attractive to the market. They need to know where are the levers in terms of their capital structure. And more importantly, secondly, I think this is in the realm of, I would say, shareholder engagement. You need to engage investors. Mm-hmm. And I think this is not a skill where you actually can just parade the company in front of investors. You actually have to put up a very compelling story to tell the investors that you have the formula to provide to unlock the value.
Mm. So speaking of capabilities development, Prof, a second batch of asset managers will now be appointed, right, under the Equity Market Development Program. Now, does this tie into what you're talking about capabilities? How do you see this helping develop the local fund management and then, of course, increasing investor participation?
If you look at this set of new, I would say, investment managers that come in to help us propagate or even propel the equities market development, I think this is very good. Progressively, we are actually handling the problem at the, I would say, the investor side. I think this is actually a very fast, in fact, it's just a jump start to galvanize the market, because this is where the trade takes place, and instantaneously you can see volume, and of course at the same time, if there's activity, hopefully there's value creation, value addition. Yeah.
And lastly, Prof, on the new Equity Market Implementation Committee, what should it be its top priorities to ensure momentum?
Yes, I think if you look at the holistic set of measures now, the real test is where the rubber meets the road. I think is in the execution. And I think in terms of implementation, beyond just rolling out the measures, I think it's very important to see where are the determinants of value and where exactly are the pinpointed levers in which value can be unlocked. So going forward, we need to establish the relationship, do continuous study of the stocks, of the markets, and make sure that many of these activities, initiatives are not something that is actually formulated in vain. Yeah.
All right, Lawrence, always a pleasure. Thanks for the analysis. And that was Professor Lawrence Loh, Director of the Center for Governance and Sustainability at NUS Business School.